My goal in today's webinar is that you leave the webinar with more knowledge about trading and investing than you came with. And I'm going to accomplish this by showing you how to confidently combine fundamentals with technical analysis to increase your trading profits. Just a quick disclaimer, Chaikin Analytics is not registered as a broker-dealer or investment advisor with any regulatory agency. The stocks we're going to use as examples in today's webinar are exactly that, for educational purposes. They're not meant to be a recommendation to buy or sell a given security. So with that, let's see how Chaikin Analytics can help you make more money in the stock market. Chaikin Analytics does this by helping you zero in on winning stocks, and it makes you the smart money. Remember that phrase, because we're going to end the webinar with a very specific example of how you can become the smart money. And the reason I use that phrase is when all I did was technical analysis after creating the Chaikin Money Flow and the Chaikin Oscillator, which you can find on sites like stockcharts.com and all the software packages. I used to say that by using Chaikin Money Flow, you could follow the tracks of the big institutional investors who drive stock prices, and that, in essence, meant you were following the smart money. Now that I've built a fundamental model, and it's not exactly an indicator, it's, as you'll see in a minute, it's really a fundamental model that incorporates all the things that institutional investors look at into a simple display. You can become the smart money. And we do that by helping you know the fundamentals without being a research analyst, by knowing the technicals without being a market technician, although I know that many of you are very capable technical traders, and we enable you to profit from a proven quantitative model without doing the math. Quantitative investing has become very popular. ETFs are based on quantitative models and so forth. We now show you how you can do this without doing the math. And finally, we show you how to pinpoint profitable exits and entries using Chaikin buy and sell signals. Now, just as an example of the types of stocks that we're going to show you how to find is Southwest Air. The crux of this webinar, the basis of it, is at the bottom of this one-year chart, the Chaikin Power Gauge rating. It fluctuates from red to yellow to green, bearish to bullish. But in the case of Southwest Air, as we'll see when we dive into it, the Power Gauge rating has been bullish for over a year. And this has enabled you to find a whole series of entry points for both trading and investing that have been extraordinarily profitable. And this is just one example of sort of a preview of what you're going to learn in today's webinar. Now, in putting together a webinar deck, it's always good to know what's in the path of making money in the stock market. And the biggest problem that we face as traders and investors is information overload. There's just too much information in our personal lives with Twitter and email and Facebook and LinkedIn. And then as investors, Yahoo Finance, Google Finance, all the sites that we go to get fundamental information. And when you add all this up, and I know many of you were away for the Labor Day weekend, if you just look at your email inbox today, you know what a problem it is to stay focused in the age of distraction. And that's what I call this era of information overload. So in order to make people successful and more successful trading and investing, we've got to solve the information overload problem. And for us, the solution is Chaikin Analytics for both iPad and desktop. And you see screenshots here of the desktop app and the iPad app. And when we go into the Q&A portion at the end of the session, I'm going to switch to a live desktop display so that you can actually see the flow and ask about individual stocks, and we can put them up in real time. Now, the Chaikin Analytics method, because it really is a methodology, it's a plan, can be encapsulated in this pyramid. At the top of the pyramid is the Chaikin Power Gauge display, which varies from very bearish, which is red, to very bullish, which is green. And right under that is something that's almost as important, industry group strength, and now ETF strength. And why is industry group strength important? Well, Zacks, Investors Business Daily, and Standard & Poor's have all published research papers over the last 25 years documenting the fact that if you invest or trade on the long side in strong stocks, in strong industry groups, you're going to do a lot better than if you're investing in weak industry groups. And the reason is very simple. You're putting the wind at your back. It's like trying to do to cross on a one-way street or sort of row against the tide. If you've got the wind at your back by investing in strong industry groups on the long side or weak industry groups on the short side, you're going to improve your trading and your investing results. And the Chaikin Power Gauge rating is complemented by the industry group strength that we provide. At the bottom of the pyramid are a hand-picked few, 5 technical indicators that work very, very well in conjunction with the Chaikin Power Gauge rating. And we'll go over each of them in detail in the webinar. And then finally, in the middle of the pyramid, the sweet spot are Chaikin buy and sell signals. Because if the Chaikin Power Gauge rating helps pinpoint what to buy, the Chaikin buy and sell signals help pinpoint when to buy. And as we all know, you can be in the right stock, but if you get into it at the wrong time, the results are not going to be good. And the Chaikin buy and sell signals will, in detail, show you what I call low-risk entry points. Now, all of this is meant to help you focus. Go back to that slide on information overload. How do you focus in the age of distraction? Well, the Chaikin Power Gauge rating, which is a very simple display, and all the other tools that we provide in Chaikin Analytics, helps you focus. And focus leads to conviction. And as we'll see in the course of the examples in the webinar, conviction is the most important thing in successful trading. How many of you have read any of Jack Schwager's books on the market wizards? If you have, please type Y into the chat box. And I see we've got a number of people who have. If you read any of the chapters in Market Wizards about successful traders, you see a common thread. They all have a plan. They understand the plan, and they're disciplined enough to stick with it, and that gives them conviction. And that is the common thread through all of Jack Schwager's books. Successful traders, successful investors have conviction based on a plan. And we're going to show you a plan that you can implement using the tools in Chaikin Analytics. Now, at the heart of all of our tools is the Chaikin Power Gauge rating. It's been in the marketplace for almost 4 years. It's proven itself day in and day out. It's having the ability to find winning stocks on the long side and stocks to avoid or buy puts on the short side. And the display is very simple. This is like the gas gauge on your car, but don't be fooled by the display. It's a simple but powerful and reliable indicator. I like to say that the Chaikin Power Gauge rating is like a Chevrolet with a Ferrari engine under the hood. It's simple, but it's not simplistic. And the reason it works is because it incorporates 20 factors that I distilled down from 200 in a year's worth of research. All of it's based on 45 years of stock market experience, most of them working with institutional investors. And these 20 factors are what institutional investors look at day in and day out to make their decisions. And make no bones about it, the institutional investors, the portfolio managers at T. Rowe Price and Fidelity, the hedge funds, the big successful trading firms drive stock prices. It's always been that way, and it will continue to be that way. They're the big whales who have the money, and when they move, stock prices move. So we've grouped these 20 factors into 4 categories with 5 factors in each one. And each of these is a different way to look at individual stocks. We have power gauge ratings on 5,000 U.S. equities and ADRs. So the financial metrics, which are 35% of the model, are what Warren Buffett would look at. And we're going to zero in on price to sales ratio. Price to sales ratio reflects how much you're paying for a dollar of revenue. And in a lot of the bearish examples that we're going to see in a few minutes, the stocks at their peak had extraordinary, exorbitant price to sales ratios, meaning that you were paying too much for a dollar of revenue. So an example right now of a stock that's still making new highs where the price to sales ratio is off the charts is Tesla. And as long as the price is going up in stocks like this, everything is fine. But when something goes wrong, and it hasn't yet gone wrong for Tesla, although there have been some very big drawdowns, and difficult stock to own for the long term, unless you don't check the stock prices every day. But most of the stocks like Lululemon and Whole Foods and some of these cloud and big data computing stocks that have tumbled, along with some of the biotech stocks or new issues with very high price to sales ratios, have been dangerous stocks to own as soon as something goes wrong. So momentum investors and momentum investing is great. These stocks tend to move in herds, so when something goes wrong with one stock in a group, it goes wrong with all of them. The technicals are only 15% of the model. It's 85% fundamental, and that's a real value add. Because most of us, and for me, it was a good part of my career up until 2009, used technical analysis. But that really is a way, as I said, to monitor the big institutional investors. Whether you're looking at money flow or rate of change of price or trend, whatever it is, you're really just monitoring the tracks of the big investors. Now, at the bottom here, the experts are the smartest people in Wall Street. And knowing who the experts are and being able to model them in a disciplined way without putting in a lot of time on a stock-by-stock basis is really the key to making money. So let's just zero in on two of them, the short sellers and the insiders. Now, short sellers are very smart. Hard to make money on the short side, especially in a 5-year bull market where people just haven't been able to make money on the short side, but the shorts find a way to do it. They're typically the smartest people on Wall Street. So when there's a heavy and growing short interest in a stock, that will have a negative impact on the power gauge rating. Insider activity is really interesting. We focus on insider buying because in spite of the big compensation packages that insiders typically get with golden parachutes and stock options, there comes a time when an insider is compelled to take out his wallet and write a check and buy more of his own stock in the open market. And they do that for only one reason. So if you think you know the reason, type that into the chat box, please. And those of you who typed in because they think their stock is going up are absolutely right. And not only do they think their stock is going up, they think it's going up in the short term, because otherwise they wouldn't write the check. They're already well compensated if the stock does well. So there's a greed factor there, and we can monitor that. So if the insiders are buying their own stock, that's very bullish. Now, so we've got the Chaikin power gauge, which works. We've got back-tested results. We've got real-time results, as you'll see. And the biggest endorsement that I can give you is that NASDAQ and Chaikin have entered into a partnership. They've launched, as of April 1st, co-branded NASDAQ Chaikin power indexes. And there are going to be ETFs based on these indexes. And the indexes have outperformed their benchmarks since April 1 when they were released. So from my point of view, you can go on our website and see the back-tested results, but these are really the endorsement that I was always hoping for. So let's get into the meat of this. We have what we call a classic bull. The power gauge rating is bullish. Here's Southwest Airlines. Price trend is up. Very important that it be outperforming the market. We've converted relative strength from a number into a red-green heat map, and that red-green heat map makes it easy to see if the stock's outperforming the market. We'd like to see strong Chaikin money flow, which is where I made my reputation, because it's telling you the institutions are buying the stock, and then we look for a buy signal in Chaikin analytics, and we call that a classic bull. And when I was doing these webinars, this looked very similar to a pattern that I had been taught many years ago called the Wyckoff pattern: accumulation and then distribution and ultimately markdown. Wyckoff created this 90 years ago The same patterns are true today. And the reason I think that's important is this gives me the conviction, and we talked about conviction early in the webinar, to present this to you as something you should take seriously, because it's worked. It's worked for me for 30 years. It's worked in the marketplace for almost 100 years. And the patterns you'll see, and we're going to have the example right here of Trinity Industries, conform to that Wyckoff pattern. So here's Trinity Industries. The power gauge has been either neutral or bullish for over a year. The stock broke out of that accumulation or basing phase back in late October of 13 when the stock was under 25. Chaikin money flow had been building up, and even prior to that, the relative strength of Trinity to the market had gone from red to green. There had been a change of personality, and the stock was now stronger than the market. And then in early October, the power gauge turned bullish again, and this was your opportunity to zero in on a stock like Trinity, and I'll show how we do that in a minute. And then we have what we call a relative strength buy signal, and the relative strength buy signal is very simple. It's a stock that's outperforming the market, that gets oversold, trades below its 21-day exponential average, and then rises above the 21-day exponential. That triggers a relative strength buy signal. And when a stock is outperforming the market and the model power gauge rating is bullish, I like to say that the market and the model are in agreement. And when you get a relative strength buy signal in that circumstance, you get price acceleration to the upside. And look at all these opportunities after a relative strength buy signal to benefit from a sharp upward move, whether you're a trader, swing trader, an intermediate investor for your 401k plan. This works. And I've been using Trinity in webinars since way back in February. And there's been a whole series of relative strength buy signals. The last one happened in August when the stock was underperforming the market. I'm sorry, when the power gauge rating had turned neutral. But because it was still outperforming the market, that signal worked. And Trinity actually made a new high today in a flat to down market, closing at 49.21, actually closed higher. I think it was 49.65. Made a new high, and this stock just can't quit. Now, I've circled decline back here in May when the stock dropped 15%, and this speaks to the conviction point of view. A very well-known research firm in Boston called Off Wall Street, great track record of picking short sales, recommended a short sale on Trinity at about 43 7/8, and the stock dropped 15% almost overnight because of their influence. But the power gauge rating stayed bullish. The stock was outperforming the market. Chaikin money flow was bullish even on the decline, and that's not always the case. But when it happens like that, as it did here in January and then again in May, that's a really powerful under-the-surface indication that this stock is still in strong hands and that the buyers are in control. So what happened after that short sale recommendation? The stock rallied and made new highs because the company is reporting record earnings. Now, they're in the transportation group, which, as we'll see in 2 slides, is a strong group and has been for over a year. But they also make something called mobile pipelines. They move pipelines to where gas is being extracted and liquids are being extracted from the ground, and then they enable exploration companies to move that to the Gulf Coast refineries where it's converted into petroleum products. So a very interesting business, and Trinity is making new highs. And by zeroing in on stocks like this, and I'll show you how we do that, you too can become independent and find these stocks and make money, because these entry points really work in stocks where everything is lined up. So I said we'd go into detail on Southwest Air, and here it is. Power gauge has been bullish for over a year, but when it started out, the stock was underperforming the market. That equates to the Wyckoff basing phase. Let's just go and review that. Accumulation phase, breakout, pullback, and then all the patterns that we know as market technicians. So here's the breakout, around 15 3/4, and here's what the money flow was doing. Big buildup in money flow. Institutions were buying this stock, and the power gauge was bullish, and the stock was outperforming the market. So then we look for an entry point, and here we're using one of my favorite signals, oversold buy signal. Really simple. I owe this to Larry Williams. Stock is got a bullish power gauge rating. It gets oversold and it makes a new 8-day low. It's not meant to be a precise pinpoint, buy it right now entry. It's telling you that this is a low-risk place to buy a stock that's got everything going for it. And look what happens in July, right before Southwest Air reported earnings that were better than expected. The stock skyrocketed and made a new high. It just kept going, no pullbacks, and it made another new high today. When I pulled this chart earlier in the session, the stock was up over 2%. I think it finished even stronger than that. And I talked about having a plan and the sort of Jack Schwager market wizards analogy that all the successful traders have a plan and they know why it works for them. And to me, a plan has to pass the smell test. It's got to make sense. So if you look at Southwest Air, if you look at Trinity, it makes sense. Oil prices are dropping. That means their costs are down. Southwest Air is expanding into European and international markets. After having bought AirTrans a year and a half ago, they're now integrating it with Southwest Air. This is a carrier that everybody loves because they don't penalize you if you cancel a flight like US Air does. So it's now American Airlines. Very powerful underlying fundamentals. It makes sense, and all the Chaikin tools line up. So that's what you look for. And one final piece, if we go back to Southwest Air, we tell you what the industry group is doing based on the power gauge rating. Industry group is strong. That means most of the stocks in the transportation group have bullish power gauge ratings. So here's what the transportation ETF looks like, the XTN. It's been outperforming the market as well for the last year. Group trends are powerful. You could have been buying JetBlue. You could have bought Southwest Air or Trinity Industries, all in the transportation group. And knowing that the group is strong can help you zero in on the individual stocks to buy. So that's your classic bull. The classic bear is the reverse. Power gauge rating is bearish. The stock's in a downtrend. Relative performance is weak. That's really important. The poster child for that is Lululemon. And before we get to that, here's what Wyckoff dreamed up 90 years ago as the idealized way that stocks go down. They go into a distribution phase, they make a lower peak, they break down, they rally up. We see this over and over again 90 years later in the stock market. And here it is in Lululemon. Here's your distribution phase. Very high price to sales ratio. You were paying 14 times revenue at the high at Lululemon when it was over $80. Even after dropping more than 50%, it's still selling at 4 times revenue, 3.5 times revenue. When you buy a stock with a very high price to sales ratio, you're on a high wire act without a safety net. As soon as something goes wrong, you've got problems. So what went wrong with Lululemon? Well, everything went wrong. The president and founder resigned. The chairman started selling stock, and they had to recall their biggest selling exercise line. Now, Lululemon makes what I consider to be overpriced exercise gear for women who do Pilates and yoga. It's a very trendy company with a trendy space. But the bottom line is you can buy the same things at Gap, the Athleta chain, and other places for a half to a third of the price. So as soon as Wall Street got wind of the fact that Lululemon was no longer the darling it thought it was, the emperor suddenly had no clothes on, the stock is vulnerable. If they report a negative earnings surprise, as they did here in November, right after a relative strength sell signal, the stock gaps down. It gapped down again in June when they reported negative earnings. So this pattern and these patterns keep repeating over and over and over again. If the power gauge is bearish, and you know that from the bottom here, it's red, not green, and the stock is underperforming the market, and you get big institutional selling, which has persisted for almost a year in Lululemon, that stock's going to go down. We're going to see other examples of that in a minute. Another example is Whole Foods. Another darling of Wall Street, but it's basically a supermarket chain. I love shopping there, but I don't want to own the stock. And every time they disappoint Wall Street, and they've started doing that 3 times in the last year, the stock tends to gap down. My biggest nightmare as a trader is waking up with a position and finding out on CNBC that they've reported disappointing earnings and the stock's gapping down lower. And we'll show you how to find those stocks and avoid them for benefit during earnings season. And notice that the relative strength does the opposite of what it did in Trinity and in Southwest area. You've got a change of personality. The stock goes from outperforming the market to underperforming. So this is part of the Chaikin methodology. We've actually developed a 5-step plan. My wife, Sandy, is the poster child for that. She coordinates all our marketing and public relations at Chaikin Analytics. And up until 2 years ago, she never owned an individual stock, just one. Airgas, a local company where her sister has worked for 20 years. And Airgas has actually been a great stock. But Sandy, about 2 years ago, saw the testimonials we were getting, and we're going to see one in a minute, and said, I want to start investing my 401k plan, not just in mutual funds and spiders, which is what I've been doing, but in some of these stocks that people are finding with Chaikin Analytics. So she started doing that. And her current portfolio has Southwest Air in it. It has, as we'll see, Alcoa and Skyworks. She's been able, over the last 2 years, to pinpoint winning stocks time and time again. Part of the reason is she doesn't overthink it. She sticks to the plan. Plan has to be simple enough that you can stick to it. Whether you use the Chaikin methodology, Investors Business Daily, Fibonacci numbers, whatever you like, you've got to believe in the plan so you have conviction. It's got to be simple enough to follow. It can't be something that is only apparent in retrospect. And sometimes Fibonacci and Elliott Wave are just that. But this is really visual and simple, and it works because it's based on sound principles. So I've got a testimonial here, and the reason I include testimonials in a webinar like this is very simple. I came out of retirement to start this company 5 years ago. I had already sold my first company to Reuters. It was a real-time workstation for traders and portfolio managers. It's very easy for me to do a webinar like this and convince you that this is something you should take seriously. But you shouldn't be following gurus. You should follow the money. Decide whether this works for yourself. And the testimonials are in here because we have subscribers to Chaikin Analytics who read our Market Insights, which is a weekly market commentary that comes bundled with Chaikin Analytics. And they're making money, and we get these testimonials every day. So someone followed a put trade in Whole Foods and gave us this testimonial in May. I put on the Whole Foods put trade, which was your alternative bear trade of the week in Market Insights. Today, I locked up 190% profit in 2 days. Consider me a loyal user. Well, that was this sell signal in late April, which caused me to make this my bearish stock of the week ahead of an earnings report. A lot of people are afraid to trade in earnings season because it's so volatile after earnings report. I think you have to really take advantage of earnings season, and I'll show you how to do that in a couple of minutes. So what we've been talking about in terms of the classic bull and the second step in the Chaikin 5-step methodology is how to play offense well, which to me means knowing what to buy. And Chaikin Analytics is excellent. The power gauge rating is excellent at telling you what to buy. So here's a couple of examples of that. Apple, power gauge rating had been bullish in October. The stock, as we'll see, reversed from a long-term downtrend. When they negatively reported and disappointed Wall Street in January, it gapped down and the power gauge turned neutral. Not bearish because the underlying factors were still very positive. The analysts had soured on it. And when analysts sour on a stock, they lower their earnings estimates and they lower their opinions, and the big institutions follow them. But lo and behold, in mid-April, Apple surprised to the upside, better iPhone sales. The stock gapped up, and when it gapped up, the power gauge rating turned bullish. The stock was about $79. And it's moved up over 103, and I've recommended this 3 times as my bullish stock of the week, including 2 weeks ago when the stock was 100. And the reason I like Apple is because the power gauge rating is bullish, and it's outperforming the market, and the institutions are buying it like crazy. in anticipation of the iPhone 6 launch on September 9th. Now, I don't know if iPhone sales are going to be better than expected, but we have a couple of clues. One company, Avago, reported last week, and they get a huge percentage of their business from Apple. And they said that their business is going gangbusters, and they expect major revenue in the third and fourth quarter based on a new product rollout. Well, that's a veiled hint that the iPhone rollout is expected to be very, very strong. Apple is gearing up for it. They're manufacturing iPhones in anticipation, and we'll see another stock that we've zeroed in on in our market insights, Skyworks, that is also a beneficiary of that. So we got an oversold buy signal here in June. I made it my bullish stock of the week. They reported better than expected earnings in July. The stock gapped up, pulled back, and it's continued to make new highs. And then today they announced a mobile payments scheme with partnerships with American Express, Visa, and MasterCard that people think will make the iPhone 6 a sort of mobile commerce giant. And that means they're competing with eBay, which is PayPal, and that's powerful. Skyworks, we just talked about, consistently beating Wall Street estimates. That's what you want. Power gauge ratings bullish. The odds of a bullish earnings surprise are much higher. Stocks outperforming the market, positive Chaikin money flow. You want to try and buy every pullback. And the oversold buy signals and the relative strength buy signals are excellent entry points. Now let's look what happened in July. First of all, back here in July, as we'll see in a little bit, I made this my bullish stock of the week. They reported better than expected earnings. It gapped up, but there was an even easier way to know that this was going to happen. In early June, Skyworks told the Wall Street community, your estimates are too low, raise your estimates. That's called guiding higher. And that's really important. So they had already told you that they were going to report better than expected earnings. They put Wall Street on notice. And where do I find that? Yahoo Finance, because before I recommend a stock as my stock of the week, bullish or bearish, I check a couple of the public sources, Yahoo Finance, Seeking Alpha, just to make sure that the recommendation passes the smell test. And in the case of Skyworks, it was pretty easy. Now, does that mean I couldn't have lost money in that recommendation if I followed it? Of course you can. But the key is the power gauge was bullish, everything lined up. We had a buy signal. They were due to report better than expected earnings. They pulled back after that spike for about 2 weeks. Now, my wife Sandy sold half a position on that spike, so she's gotten even smarter than I am. And she's learned that these spikes are very often a good place to take some of your profits. And I believe she bought back into this stock at around 51 on that pullback, and the stock made a new high last week, just under 57. So this stock is also up in anticipation of the iPhone 6 rollout, because they make chips for the iPhone 6. Here's another example. In this case, this is a unloved stock, computer storage, competing with cloud computing companies. They've righted the ship, they've tightened it up. And I recommended this as my bullish stock of the week when it was trading at 39 based on this buy signal and the fact that they were due to report earnings. Now, this chart is about 5 days out of date. The stock spiked up, and it's been going sideways for 5 days, but it hasn't lost very much. It's still 41.11, and the high was around 41.80. And this is another stock with, in this case, a turnaround, just turned bullish from a relative strength point of view. But look at the money flow. The institutions have reversed gear. This was a big downtrend stock. Power gauge picked it up early, and it's another example of where the power gauge can help guide you. It's like a GPS. You couldn't do all the research on this many stocks. I couldn't do it. I actually don't know how to do that research, but the model does it for me. And when I say I don't know how to do it, it's very hard to know how to combine 20 different factors and not be overwhelmed by it. In technical analysis is a phrase, analysis paralysis, but the same is true in fundamental analysis. How do you know what to look at and how to weight it? The model does that for you. So 3 examples of bullish stocks, but it's also important to play good defense. And to me, playing good defense means three things: having a good money management discipline. That means having a stop loss on every position, trade, or investment. You can't let one stock destroy all the good work that you've done over the course of the year. You've got to get bearish Powergate stocks out of your portfolio. If you've got them in your 401k plan, if you're a swing trader, don't trade them on the upside. Don't bottom fish. It's not worth the pain and the sleepless nights. And then finally, playing good defense means turning landmines into gold mines. And by that I mean taking stocks with bearish power gauge ratings and looking for opportunities to buy put options. And I'm using Amazon as an example because this is another one of those stocks with a high price to sales ratio. Amazon has almost $100 billion of revenue, but they don't really make any money. When you factor in the options they're giving out to employees, they don't make any money. And Wall Street caught on to this scam, and I call it a scam lovingly because we love that $75 a year next day shipping that Amazon gives us, and I buy a lot of things. But as a stock, this stock is not returning to the investors. So what do you want to do when the power gauge is bearish, when it's changed character and gone from outperforming to underperforming? You want to look for opportunities to buy put options. And I'm using this example because in mid-April, just before the earnings were due out, the stock had rallied up to 335. Amazon is a classic example of wishful thinking on Wall Street. Periodic rallies and then disappointing earnings. Happens over and over again. So at 335, I made Amazon my bearish stock of the week. The stock reported disappointing earnings. Notice that on the day before they reported, the stock closed up and at its high. We'll see this pattern repeated over and over again. It's a little bit of short covering, and it's a lot of wishful thinking. And it happens very often in bearish power gauge stocks that they rally the day before earnings are due out. It's just an odd quirk of human nature that people want to believe that this time will be different. Fact is, it's never different, and it happened again in July. Company reported disappointing earnings. In this case, it had moved above our long-term downtrend line. This is a double smooth 200-day moving average for those of you who are technically inclined. And the stock gapped down again from 360 all the way down to 305. And now it's had a big retracement rally. It hasn't yet filled the gap, and it's having a hard time getting traction. Now, the market, as we know, is making a new high. The S&P is above 2,000. The NASDAQ is making a new high, as we'll see in a minute with the triple Qs, and Amazon is closer to its low than its high. You don't want to be long the Amazons of the world. It's a loser's game. Jim Cramer likes to say it's a mug's game. And that's an expression that goes back to the 1940s, the Our Gang comedy movies. But it's as true today as it was in the 40s. You don't want to try and outguess the big institutions. It's a loser's game. Now, here's another example, DreamWorks. If you've got children or grandchildren, DreamWorks is your favorite company because they make these wonderful full-length cartoon movies that amuse the kids. But as a stock, it's been anything less than amusing. Power gauge rating turned bearish in mid-January at 34, 33 and a half. In April, the stock rallied and then had a big gap down, and we'll see why in a minute when we end the presentation. And then it triggered a money flow sell signal. So the money flow was very weak, and the stock rallied up a bit. And finally, they reported disappointing earnings, and the stock gapped down from 23 all the way to 18 and change. And then look what happened. It went sideways for 2 weeks. And on one day, about 2 weeks ago, it rallied from under 20 to 22 and a half. And the reason is they fired the CFO. Now, if any of you think Wall Street is rational, is firing the CFO a reason for a stock to rally 15%? Well, the answer in my mind is no. And what did the stock do? After that spike up to this upper volatility band, it traded back down again. And it's going to have a hard time going, in my opinion, above that 2250 to 2275 level. It did fill the gap. And this is another example of a bearish power gauge rating and weak relative strength, pinpointing a stock that you want to be out of, stock you want to look to buy puts on. And these rallies up to overbought are interesting put buying opportunities. So the signals help pinpoint the entries. 6 pairs of buy and sell signals. We've talked about 3 of them. The first 4 are filtered by the power gauge, so you only get a buy signal on stocks with a bullish rating. The relative strength signals don't care, as we saw in Trinity. You can get a relative strength buy when the rating is neutral, or a sell, as we'll see in Apple in a minute, going back to 2013. So let's look at some examples of signals in action. So here's Apple. We already saw that it reversed to the upside back in October of 13 into 14. But from a high of 700 on the pre-split stock, the power gauge went neutral, didn't go bearish, but look at the relative strength in the money flow. Powerful negative factors. And every time the stock rallied above its 21-day average and then dropped below, because the relative strength was red and not green, it triggered a relative strength sell signal. So if you were still long Apple, great spot to get out. Or if you were looking to buy puts, particularly ahead of these earnings reports, which were disappointing back in that 9-month period, the first 5 of these signals worked. The last one didn't work. So 5 out of 6 worked, and that's why I said play defense, you need stops. You don't want to let that one bad put trade or short sale destroy all the work and the profits that built up in these 5 other profitable trades. But right at the end of the chart, you see that there was a relative strength breakout. This chart goes back to 2013. It ends in the end of September. And then we saw what happened. The power gauge turned bullish in October, and now we're off to the races with the stock trading above its previous all-time high on a pre-split basis, which was 700. It's now trading at 103, so that's 721, and probably on its way to 710, or rather 110, just before the iPhone 6 announcement. Pandora, another stock where you got a sell signal, in this case a relative strength breakdown signal ahead of an earnings report. Disappointing earnings. They actually pre-warned, and then they disappointed. The stock gap down. Here again, right over here, the stock rallied the day before earnings came out. This is an uncanny pattern if you have a bearish power gauge rating. If you have a bullish rating, all bets are off. The stock's probably going to report a better than expected earnings. Hewlett-Packard, another stock with a power gauge rating, has been bullish. We featured this as our bullish stock of the week back in early 14. Relative strength buy signals. They work. Stock is outperforming the market, trades under its 21-day exponential, and then moves back above it on a closing basis. 5 relative strength buy signals, and they all work. And all of these are stocks that I've been tweeting about or featuring in our market insights. So they're not cherry picked. These are stocks that our clients, our subscribers made money on. And this last buy signal came ahead of an earnings report. And even I was feeling that maybe this time it would be different, but I don't let my feelings get in the way. Positive earnings surprise, gap up, and it's just kept going. This stock is very powerful. So how do you find these? When we launched Chaikin Analytics back in January of 13, people gave us feedback, subscribers, these signals are great, but how do I find them? There are 5,000 stocks, a lot of signals every day. So we created this alerts signals dashboard. And this happens to be from Friday, August 15th. I was away on a holiday, and you'll see at the end that it was a great vacation, and it was primarily because of the profits that my wife Sandy had made in her 401k and her trading account. And on that day, in the My Stocks list that I have, which is about 105 symbols, far too many for anybody to follow, but I do that because I write a market letter and I do webinars like this, so I want a broad list of stocks to pull examples from. 5 stocks. We're going to focus on the top 2. eBay gave an oversold buy signal at 52.64. You now know what that means. Power gauge rating is bullish, and the stock made a new 8-day low and got oversold. And Gilead Sciences, and we'll look at that in the context of the healthcare group, 99.49 momentum breakout. So here's what he looked like on August 15th. Power gauge had just turned bullish in mid-July. It was still underperforming the market, but money flow was powerful, and that's the oversold buy signal that you saw on the dashboard. And look what happened. Better than expected earnings, a very, very bullish scenario about mobile payments, and the stock gapped up, and it went from 52 and change all the way to 57. Now it's pulling in a little bit. The Apple announcement today was not viewed favorably for eBay. So we also monitor ETFs. Don't have a power gauge rating yet. We hope to by the end of the year. But you can use ETFs to trade, as many of you do. If you trade the triple Qs or the Russell or the Spiders, you're going to see something eye-opening in a second. But you can also use ETF to find stock ideas. So I've got 4 screens from our desktop app. This is what our list manager looks like. It makes it all easy. It's very easy to navigate. So we have indices at the bottom of the Dow, the S&P 500, or the NASDAQ, and we rank them based on the number of stocks that have bullish versus bearish power gauge ratings. And then underneath that is the Russell, which is the small cap 2000 universe. And notice that in the Russell, which has been lagging, it's an equal separation, 365 bullish, 365 bearish. In the S&P, it's 126 bullish and 79 bearish. In the NASDAQ, 2417. These are the strong areas of the market. But look at the top here. These are the 3 NASDAQ Chaikin indexes. You can quote them on Yahoo Finance, Google Finance, or any quote machine. And look at the separation. These were created on March 30th. And to this day, the large cap has 29 bullish and only 1 bearish. The small cap, 84 bullish and 9 bearish. And the dividend achievers, 27.8. So 4 months later, 5 months later, the power gauge rating has stood up. These were created with only bullish power gauge ratings. So a few of them have turned bearish, but when you contrast that to the market, it shows you how powerful the power gauge rating is. And these indexes are outperforming their benchmarks, and that's the real key. So we're going to see a couple of examples of index trading, and then I love to look at the sectors, the 9 select Spider sector ETFs, to see where the action is in the market. And the top ranked sector today was healthcare, 16 bullish stocks and 3 bearish. And then you can drill down and see those stocks, and we'll see that in a minute. So how do you use Chaikin Analytics to trade ETFs, market-based ETFs better? Well, you look at the relative strength, because we don't have power gauge yet. If the triple Qs are outperforming the Spiders, and we know that because the relative strength is green, not red, you want to find any excuse in the world to buy that on a dip. And it started outperforming again in late June when the triple Qs were 92, and they rallied up to 100 on Friday. And they got oversold back here in early August with good money flow, and that was a great buying opportunity in the 94.5 area to get market participation in the right area of the market. This is what the wrong area of the market looks like. I said this would be eye-opening. The small cap stocks have been underperforming the market since late March. So with the market up at a new high, the IWM is trading 3 to 4% below its high. You don't want to buy an ETF, broad-based ETF, if it's underperforming the S&P. You want to buy the S&P itself, or even better, the triple Qs. Look at that wonderful stair-step pattern up. Now, if you want to get stock ideas, you tap on Spider sectors. As we saw, they rank by power gauge rating. Here's healthcare right at the top. You drill down by tapping healthcare, and you see all the stocks in the XLV healthcare ETF ranked by Chaikin power gauge rating. Makes it pretty easy to find the best stocks in a strong sector. And the one we're going to zero in on is Gilead Sciences, which was trading above 109 today. But remember back on that dashboard, Gilead was 99.49 on April 15th when it triggered a momentum breakout buy. And here's what Gilead has looked like since that momentum breakout. So the dashboard helps you find them, and this stock has spiked up another 10%. And again, it's gone above the upper volatility band, which is how the momentum breakout signal got triggered, and it just won't pull back. Why? Because the biotech stocks were killed in March, April. The small cap IPOs did worse than the large caps like Gilead and Biogen and Amgen. But they now have approval on this very expensive hepatitis drug in Europe, and that's what triggered the whole drop in the biotech sector. And Europe is embracing it. Here we've got congressmen who say it's too expensive. That's why the biotech sector dropped, in addition to Janet Yellen, the head of the Fed, saying these stocks were in a mini bubble. But Gilead is the real deal, as are some of the other large cap biotech stocks, and it's been going up. Now, another stock that we've loved in the healthcare sector is one of the managed care companies, Community Health System, CYH. We made that our bullish stock of the week back in July, and the stock was around 42.5, and it traded as high as 56 on Friday. This stock just won't quit. So there's the oversold buy signal. There's the earnings announcement warning that they were going to be better than expected, and then the actual earnings and the gap up, sideways move. These patterns repeat over and over again. Bullish power gauge outperforming the market, positive Chaikin money flow, you get the buy signal, and the rest is all a question of money management and avoiding big losses and trailing stops if you like that. I'm not a big fan of trailing stops. I'd rather sell on strength at upper bands. That usually works, not all the time. So here's 1, 2, and now perhaps a third example here on Friday. And now I'm going to let you look over my shoulder. I think this is the most powerful part of the presentation. I write a market letter every weekend. It's typically emailed to subscribers. It comes bundled with Chaikin Analytics on Sunday. And I pick a stock of the week. So here's how I do it. My goal here is that you can do it. If my wife Sandy can do it, you can do it. This is really methodical, and it's not that difficult. So let's go back to July 8th, which happens to be my birthday. And we looked at the 20 subsector industry groups in the S&P. And in a bull market, you can go down as far as about 9 or 10, as long as they've got a better power gauge dispersion than the S&P. And the fifth ranked group was semiconductors. Transportation was up there, oil and gas exploration, REITs, could have been any of them. But I knew that the semiconductor group had been strong. So I tapped on XSD, which is the semiconductor ETF, and I validated that the group, in fact, was strong. And then I drilled down on the dashboard to see if any stocks on July 8th had triggered a buy signal. And sure enough, there was Skyworks. I really didn't know much about Skyworks, so I went to Yahoo Finance, as I said, and I found out they had pre-warned and they make chips for the iPhone. And it had just triggered a money flow buy signal at 47.67. So I tap on that and I drill down to the stock. We make it easy for you. If the flow is hard, nobody's going to do it. I wouldn't do it. I wouldn't expect you to do it. So we really invested a lot of time and energy in the user interface and the flow. So here's Skyworks, when I made it my bullish stock of the week on July 8th, trading at around 47 and change. They reported they were due to report earnings the following week, and we show you how to find these in our hot list. We have a hot list, upcoming earnings reports, and Skyworks was in there. So it was like a package, bullish power gauge, relative strength positive, Chaikin money flow, a buy signal in the dashboard, in a strong group, due to report earnings. They reported better than expected earnings. It spiked up. That's where Sandy took half her profits. Pulled back for 3 weeks. That can test your mettle. It's all about conviction. Power gauge stayed bullish. Relative strength better than the market. Strong money flow on the decline. Never turned negative. That's very powerful. And it made a new high on Friday above 56, almost 57. So here's what I said on July 13th. I did the research on July 8th, and Skyworks was due to report earnings on Thursday, July 17th. So I made it my bullish stock of the week at 47.23. Said Skyworks has a bullish power gauge rating, and it reports third quarter earnings after the close, coming off an oversold bullish rating. And then I noticed that Skyworks had averaged big gains the day after reporting over the last 3 years. So I said buy Skyworks ahead of Thursday's earnings report. And here's the testimonial we got. I'm thrilled that I got the heads up to go long Skyworks before earnings the first week I subscribed to the service. That trade paid for my entire yearly subscription. Thanks, and I want to compliment you on your user-friendly app. And we got that testimonial on July 21st, 4 days after Skyworks reported. So we have people doing this. It's not me, Marc Chaikin Guru. In this case, I did highlight it, but you can do this for yourself. You don't have to depend on market insights. It's there if you want it. But my goal is to make you independent. So the last segment of the webinar is winning plays during earnings season, long and short. And I'll give you 4 examples of that. The week before I recommended Skyworks, I made Alcoa my bullish stock of the week at $14.98. Alcoa, as you know, is the first company to report during earnings season. The stock had been in a big uptrend since October when it was kicked out of the Dow Jones averages. And just a little bit of inside baseball, when a stock gets kicked out of the Dow Jones averages, it typically outperforms the averages over the next year. So here's a stock that was booted out of the Dow Jones in September, been in an uptrend since October, due to report earnings 2 days later on July 8th. And here's what it looked like. Oversold, bullish power gauge rating, strong money flow, and they reported better than expected earnings, and the stock gapped up and kept going to 17. So for $14.98 in a very mundane company that's recasting itself, it no longer just smelts aluminum and sells Reynolds wrap, they actually make end user products for automotive and aerospace. In fact, Ford is introducing an all aluminum version of their F-150 truck, which is one of the best-selling trucks in America, and certainly Ford's best-seller. And Alcoa is providing wheels and body parts for these aluminum trucks, so it makes sense. The story makes sense. They're turning the company around. Another company that's very mundane, U.S. Steel, triggered a buy signal in July. I tweeted on this one ahead of the earnings. I said, buy it. The stock spiked up and hasn't quit. It just keeps making new highs. It peaked at above 39 on Wednesday, Thursday last week. Buy signal came at 27.50. And now the stock's outperforming, and it'll pull back at some point as it did in here, but the fundamentals are very strong for U.S. Steel, and it broke out, it keeps going. So this is a stock to keep watching and looking for buy signals. And then finally, a couple of bearish examples. Coach, another one of those overpriced fashion stocks, leather pocketbooks. You can buy them from Michael Kors, Kate Spade. There's nothing unique about Coach. Negative earnings surprises, gap down. Stock is underperforming the market. You can see the institutional selling. The power gauge turned bearish again in early March. Triggered an overbought sell signal, disappointed, and then price momentum to the downside. When the market and the model agree, you get price acceleration to either the upside or the downside. And then demandware. Remember this because it relates to what I started the webinar with, which is the notion that you can be the smart money. So the power gauge turned bearish in mid-March. There was a sell signal here in July, right before the earnings were reported, and they disappointed and it gapped down. This is one of these big cloud computing software stocks that is basically all bluster. It doesn't even have revenue. They've got $128 million in revenue, and it's $2 billion market cap. So that's 8 times revenue. I'm sorry, it's 15 times revenue, and the company doesn't earn any money. So even down from 80 to the low 50s, this stock is on a high wire without a safety net. Now, there was a big spike after earnings were reported because Goldman Sachs put out a buy recommendation on the stock. The stock spiked up 10%. And that's when it made its interim high, and it's been straight down ever since, and it was down over 1% today at the close. So this is an example where the power gauge, in this case, is smarter than Goldman Sachs. And again, it's not Marc Chaikin, it's this 20-factor model that does all the heavy lifting. It's impartial, it's not conflicted by investment banking relationships. It's exactly what you need as a GPS to navigate the stock market. So 2 other examples that are very recent. One of them, Aeropostale, is a retailer of women's clothing. And it had a bearish power gauge rating for over a year, triggered a whole series of overbought sell signals, relative strength was weak, money flow was coming out of it, and then something changed, and I can't really tell you what it was because the model turned bullish in mid-July, and we got an oversold buy signal at a price of around 305. And about 3 weeks later, the company reported better than expected earnings, and it spiked up 20%. It went from 305 to 390, almost 22%. It then pulled back, and it made another new high on Wednesday, Thursday last week above 4. So here's an example where the relative strength is still weak, but the power gauge sensed something. Maybe it saw the insiders buying. Maybe the analysts changed their opinion, or the stock got cheap enough on the value metrics. The point is, it does this heavy lifting for you. So let's look at a final example, which is Sears, who reported earnings about a week and a half ago, also a retailer. But in this case, they disappointed. They didn't report a positive earnings surprise, and the stock dropped down toward its low for the year. And Sears has had a bearish power gauge rating since mid-November at a price of about 48 and traded all the way down to 32. But here's a stock that you just don't want to bottom fish it. Underperforming the market, negative Chaikin money flow, these relative strength signals have worked, and this stock is likely to make a new low. But notice again, the day before earnings were reported, the stock spiked up. Disappointed, spiked down. It then rallies for 5 days and fills the gap. I cannot tell you why it rallied, because it shouldn't be rallying. And today it was down over 1% at its low, reversing back to the downside. So in earnings season, the power gauge rating is your friend. Stocks with a bearish rating will tend to have negative earnings surprises, bullish power gauge rating, positive earnings surprises. So I promised you that I would end the webinar showing you how you can be the smart money. On April 28th, Jessica Cohen, who's a 5-star rated media analyst at Merrill Lynch, put out a sell recommendation on DreamWorks, DWA. The stock was $26.70. Power gauge rating had turned bearish at 34 back here in January. Relative strength had turned negative. The weight of her sell recommendation, the institutions followed her. The stock dropped from 26.70 all the way to 22, and then it rallied. Then they reported a negative earnings surprise right after a sell signal, and the stock spiked down to a new low below 19. And remember I told you that the stock rallied 15% because they fired their CFO. That's like someone betting on a football team because they fired their defensive coordinator. I mean, that doesn't work. You need to do positive things to get your stock moving. So here's an example where you don't have to wait for Wall Street. You don't have to hear about it on CNBC, on Cramer, or read about it in Barron's. If you're following a discipline like the Chaikin power gauge rating, and Investors Business Daily has a model, Value Line has a model. There are a lot of models out there, but we make it easy because it's visual. It's on the screen combined with the indicators that work with it to help you make these kinds of decisions, avoid these stocks, buy put options, get yourself out of harm's way. And if you're in a Love or an Alcoa or a U.S. Steel, you're very happy because you're making money on the upside. So as you can tell, I feel very passionately about this. I came out of retirement at 65 to start this company. I really believe in it. I did it to help individual investors and traders like you beat the odds, beat the street, and I really feel strongly about it. Otherwise, I just would have stayed retired. And I built the model because I didn't want to just come back with technical analysis. So we're offering a webinar special to encourage as many of you as possible to subscribe to Chaikin Analytics. The normal price is $1,950 a year, which gets you both the desktop and the iPad access. But as a webinar special, we're reducing that price by $200 to $1,750. And you get that by going to chaikinanalytics.com/sign-up, use the offer code PUB, or call Dan Franz at 877-MY-PORTFOLIO, or email him at danf@chaikinanalytics.com. Now, if $1,750 sounds like a lot of money, and it is, unless you're serious about investing, here's another testimonial. Someone who followed that Amazon put trade, he said, I followed your Amazon trade, great trade, profit covered next year's total cost of our 2 months in Hawaii after taxes. My wife thanks you and I thank you. Anybody who's been to Hawaii lately knows that 2 months in Hawaii costs a lot more than $1,750. So what I learned on our vacation, and you'll see the vacation we just took, was that you really have to recharge your batteries. And that 2 weeks that we just spent in Turkey enabled me to recharge my batteries. And we did that based on the profits that my wife Sandy had trading the signals, the entries from Chaikin Analytics. So I want to make this as painless as possible for people. If you subscribe by midnight Friday, September 5th, we're offering a fast action bonus, an additional $200 off, bringing the price down to $1,550. So chaikinanalytics.com/sign up. The offer code is PUB. Now, I said we took a great vacation. We went to Istanbul for a wedding. First, we went to the beach and then to Istanbul. And Turkey is a magical country. And we recharged our batteries. And part of what Chaikin Analytics can do for you is not just improve your trading or your 401k plan, but it enables you to treat yourself to those little perks in life that we don't always feel we should be spending money on. So without these trading profits from Sandy, I probably never would have taken this trip to Istanbul. But here's the Blue Mosque, which is one of the most famous religious structures in the world. Started out as a church, now it's a mosque. And it's a magical place. And the reason we went there was based on the Chaikin Analytics success that my wife Sandy has. So if you can do it, you can do it if Sandy can do it. I really believe that, and she's comfortable with me saying that. So here's what you get with Chaikin Analytics. First and foremost, you get a one-on-one tutorial, because it's really important to know what you've got, to know what the tools are and how to use them, and have someone walk you through the setup. So we take customer support very seriously, and we give you a one-on-one tutorial. You get the charts, the sell signals, the list manager, everything we talked about. You also get research reports on 5,000 stocks updated nightly based on the power gauge rating, and our portfolio health check, which indicates the stocks that have changed power gauge rating and the companies that you're following that have reported earnings or due to report earnings. And you can do that for any list in our system. And then finally, the Chaikin Market Insights newsletter. So by flipping the iPad or clicking on the desktop, you get the research report. You can email it to a friend. You can save it and review it. Portfolio health check, same thing. It's all bundled in. I really believe that it has to be easy, otherwise people won't use it. So one last testimonial, amazing results, 5 for 5. These were 5 stocks of the week in succession. Lululemon on the short side, Alcoa and Skyworks, as we saw on the long side, ServiceNow and Demandware, 2 software stocks that were overvalued. And the testimonial says, I just closed out Demandware for a 14% profit this morning. He shorted the stock instead of buying puts. I've only been a member for a couple of months, and I've already paid for your annual membership fees several times over on just these 5 stocks. Thank you for solid advice. So I really want to encourage you to consider using and subscribing to Chaikin Analytics. If you sign up in the next 72 hours, the price is only $1,550 a year, and we give you the free tutorial, and you get the power suite of these 3 other services. And I know we've covered a lot of ground in this webinar, and Trading Pub is going to send you the video. But if you want to review this at your leisure, we also have a PDF of the webinar deck. And to get that PDF, go to chaikinanalytics.com/tradingpub. Give us your email address, and we'll send you the 60-page PDF. It's actually 66 slides, so that you can review these examples at your leisure. I know I cover a lot of ground, and I do it quickly, but when you look at these at your leisure, you'll see how powerful this combination of fundamental and technical analysis is. So with that, again, I would like to thank Raleigh and the whole Trading Pub crew. Yana, thank you. You've done a great job setting this up. And now, if we have time, we can switch to the desktop mode and answer any questions. And Raleigh or Yana, I am not seeing Amnovia, so if you could call out some of the questions. If people want to see individual stocks, I'm happy to enter them for as long as people have the patience to stay online.
Well, sure. And once again, thank you so much there, Mark, for a terrific presentation. And to everybody there we had some technical challenges there at the beginning, but we're pros here. We're all professionals. Mark and everybody, appreciate your passion and your patience around what we do here. And we're able to get through this in just good shape. There were several questions that were posed there, Mark. And I know initially when you were going through how to use your dashboard and your analytics, et cetera, one of the questions that was most frequently asked was, do you have a built-in scanner? How are you finding these stocks?
Well, that's a good question. We don't have a scanner. We'll have one by the end of the year or early in the first quarter of 15. You find them in three ways. Number one, we encourage everybody to create a My Stocks list. These are the stocks that you're following, you're interested in, maybe on the short side, maybe on the long side. They're market leaders like Google and Apple and eBay. And on the desktop app, you click on this little bell and you see the signals. So NetApp had another momentum breakout. Airgas and a couple of other stocks triggered bullish alerts. So that's one way. Another way is we have a list which has all the signals in them. So you can see all the signals on the S&P or any ETF. So for instance, if you go into an ETF, let's say real estate, and you click on one of the ETFs, if there's a signal on that stock, you can sort of just left click on the signal icon up here, and you'll see the stocks that triggered signals in that list. So we do think a scanner is very important, and we're working on developing it right now. It's based on feedback from users. But you could go into the SP 500, for instance, and see all the signals on the SP 500. So if I go to SP 500, it's now loaded the SP 500, ranked by power gauge rating. Second from the top is Archer Daniels. They had a bullish announcement today. Someone's buying one of the subsidiaries. It spiked up and made another new high. And you can click on the bell and you'll see, in this case, there were 144 signals in the S&P, so it's a bit of overkill, which is why we encourage people to zero in on the stocks and the industry groups that you're interested in. But you do have the ability to see this for the whole market, for the Russell 1000. Here's the NASDAQ, and then we'll go on to another question. And you just click on it, and you can see two stocks gave buy signals in the NASDAQ 100. Fiserv, you then click on that, and the Fiserv chart comes up. So it's very seamless. When I talked about ease of use, this is really easy to use. Here's another semiconductor stock, NXPI, triggered a momentum breakout. Now, I'm not a big fan of buying a breakout with the market above 2,000, but at least you're aware of it. If you own the stock, you know that something is coming, and in this case, there was some follow-through today. Happy to answer another question, Raleigh, or any individual stocks that people are interested in addition.
Sure. I do see there were several questions also, Mark, and once again, I want to thank you very much for that very generous offer that you're extending to the members of the trading pub here. That's $15.50 by this coming Friday night for this service. And the one question, several questions we're asking, is there a guarantee with this, any kind of a money back guarantee or a trial period with this, Mark?
We do have a monthly subscription, which is $195 a month. We experimented with trials, and here's what went wrong. As you saw, we invest a lot of money in training. And what we found was if we gave people a 30-day free trial, they really didn't take it seriously. They didn't invest the time. We invested the time to get them up to speed. And it just wasn't a win-win situation. People didn't get up to speed. They didn't really learn the system or take the time. A lot of them didn't take advantage of the free onboarding. So what we do is we take a credit card, and if someone is really unhappy at any point in the subscription, we'll prorate a refund. So if you've used it for a month, we'll charge you for a month and refund the balance. We find that less than 2% of our subscribers take advantage of that. So we're comfortable doing it. We much prefer that to a free trial, because people, when they've committed and they've invested some money on their credit card, are more likely to dig in and learn this and be comfortable with it. And again, that leads to conviction, and that's what makes this whole thing work.
Yes, I agree completely with that. There were questions here. Anthony is asking, do your arrows and indicators in your heat maps, do they repaint themselves? And I guess what you're referring to, Anthony, if you're watching the live markets, are they just being repainted? Is that your question, Anthony?
I think I know what he
Yes.
means, Raleigh. What we do is you can get 3 or 4 oversold buy signals in succession. We only put an arrow on the first one. So we're very intellectually honest. If another signal occurs within 12 trading days, we don't even show you that one. So these are the signals that appeared when they happened. So here's the first 3 that worked, and then this one, you had a bit of a drawdown and a basing period, and it didn't work. None of these are redrawn based on history. This is exactly where they were and when they happened.
Okay. Folks, got any, are there any specific stocks that you'd like to have Mark bring up that you have some questions about? MCO.
Moody's. Warren Buffett still owns a big position in that. This is the choppiest power gauge bar I've ever seen down at the bottom. Bearish, bullish, bullish, bearish. When I see that, I'm not believing the power gauge rating. I go to the technicals in that case. So here we've got Moody's outperforming the market. I don't like the fact that you're making a new high here with negative money flow. Remember when we looked at Southwest Air, how it pulled back and it made a pretty steep decline here over a 2-week period, and money flow stayed positive. One of the things that we did with the institutional investors on our workstation in the 90s was train them that if a stock makes a new high, and here's Moody's spiking up to a new high in February, and money flow stays negative, that's a sign that the institutions are selling the stock under the cover of strength, and you want to be selling it as well. So here in July, it spiked up, but money flow was positive. The only clue you had was what we talked about earlier. If you spike up to an upper volatility band, that's usually a good place to take profits or partial profits. In this case, you traded up to a volatility band, you made a double top, you didn't exceed it, and the money flow stayed negative, you got overbought. So that's the conclusion I draw here. Moody's is a stock that I'd be selling here, not buying.
Okay, a couple other stocks that were thrown out here quickly, Mark, were FTR.
Frontier Communications. Telephone utilities are a strong group. How do I know that? Because we tell you. Industry group is strong. Technicals are strong. Here's one where the power gauge just hasn't liked the stock. It's probably a valuation thing. I can click here and actually see that it's the expert opinions. So what are they? That's what the analysts are thinking. There's a very high short interest in the stock. The analyst ratings are dropping. So the power gauge is not really helping, but here's that pattern we were seeing in Moody's. You spike up above the upper band and the money flow is negative. Even though it's outperforming the market, that's a great spot to sell the stock. Look at all these upper band spikes where you could have sold it. Back here, from a trading point of view, that worked, then the stock kept going. One other thing is, although the power gauge does work on lower price stocks, it's better on higher price stocks. Now, we saw Aeropostale where that's not the case, but here's Rite Aid. The power gauge turned bullish. We also have 5-year charts on here. The power gauge turned bullish on Rite Aid in late 2012 at just over $1, and it went to 8.5. So although I say the power gauge isn't as good on lower price stocks, it can do just fine. And excuse me, in the case of Rite Aid, power gauge turned bearish briefly in late July when they disappointed earnings-wise, and the stock has really been in a downtrend ever since. So Frontier, because of this negative money flow on the spike, I'm going to say it's a stock I'd avoid or take some profits on, but it's not clear-cut with the power gauge neutral.
Sure. Question, this is more of an application question. Kim is asking, how does this interface with my current trading platform? For example, Kim uses TradeMonster.
Well, we don't well, we actually have an iPhone app, which is free, which interfaces with the TradeMonster mobile trading capability. Okay. So, but this particular app, the desktop or the iPad, doesn't link to TradeMonster, but you can get the power gauge for free on the iPhone, and on Chaikin Analytics, it's called Chaikin Power Tools. So on Chaikin Power Tools for iPhone, there is a seamless link to the TradeMonster platform. So you could trade options or stocks on the TradeMonster platform, and we've sort of put on a very slick spreads interface for those of you who trade spreads. But this app itself does not link to any mobile or desktop trading applications.
Okay, good. And folks, I think for questions, application questions like this, you'd be better off speaking directly to Mark and his team about how we can pull these things together for you. Gordon says, hey, from your perspective in your own trading, what is the typical length of time that you're in a trade? Does that vary significantly for you, Mark?
Well, that's a good question, Gordon. It really depends on what your goals are. In a 401k plan, the power gauge rating has an ideal predicted value 3 to 6 months ahead. Now, as we saw with Southwest Airlines, or if we went back to Yahoo, which is another stock my wife Sandy owns, it gives me great pleasure to reference what she's done because she's done this all on her own. Yahoo turned bullish in mid-2012 at around 15, and it stayed bullish all the way to 40. So that's a pretty long time horizon. If you were, and then it turned bearish in early 14. If you're a swing trader, these entry signals like the oversold buys on the bullish stocks or the overbought sells are roughly a 2 to 4 week window. Now, someone once asked, is this good for day trading? It wasn't created for day trading, but I feel very strongly, and I don't know how the trading people feel about this, that if a stock is going to go up over the intermediate term or is a good swing trading candidate from the long side, that's also the stock that's going to do well on a day trading basis. So some of the names that we looked at, and again, I've been using these stocks over and over again for the last 5 months. Trinity Industries, on a day when the market was flat, was up 2.5%. I've been using that as an example since March. Southwest Airlines, up 2.8%. So if you are looking to day trade today, and I don't particularly advocate day trading because I think it's an awful lot of work for very little payoff, very high stress business, as those of you know who are in it. And I used to do that with S&P futures before I started Chaikin. But very often the stocks with the strongest underlying fundamentals, as indicated by the power gauge rating, are also the stocks that are going to go up. So here's Apple. Bullish power gauge rating, up 0.8%. The market was flat today. So it works across all time frameworks, Gordon. It really depends on what you're comfortable with. And that's another element to the game plan. Not only does the trading plan that you use have to make sense, it has to be one that you're comfortable with. So if I gave you a system that was great for 3 to 6 month trading, but you prefer to exit on 2 to 3 day moves or 2 to 3 week moves, it's not going to work for you. So it really has to be compatible with your personality and with your plan.
Okay, great answer there, and it was a good question. Couple other, Mark, there's a couple other that come in here, triple Q, QQQ.
Well, that's one we used as an example. It's been, you'll see the relative strength here.
Yeah.
It outperformed all through the latter part of 13, and then it underperformed in April. And the reason it underperformed in March and April is that the biotech stocks and the cloud computing and software stocks that we used as bearish examples got hammered. And then eventually it regrouped, and in late June, the relative strength indicator went from red to green. And the Qs were sort of flat at 92 and change, and now they've gone up all the way over 100, finished the day in plus territory. When I took that chart earlier today, they were actually down a bit. So triple Qs look great. Now it's a question of comfortable entry point. If you're a believer in this market, I guess you're forced to pay up for the triple Qs. I don't like paying up for things, so I'm going to look for an oversold, an 8-day low, some pullback of 1.5 to 3 days if we do get some selling in here, something to give me a little bit of comfort and a little bit of an edge. But the triple Qs are clearly the place to be.
Okay, and just a couple more here. There was a question about Ford Motor.
So Ford had a bullish power gauge rating on the way up from 12 all the way to 18. The rating turned bearish in late December, and the stock basically underperformed through that whole period. It turned bullish again in late May when it broke above this long-term trend line, because there is a little bit of technicals in the model, and that was at 16.5. They say the industry group is strong. We can know that by clicking on it. I think there are better places to be than the auto stocks.
Sure.
Here's the whole auto, tire, and truck group sorted by power gauge rating. And there aren't that many bullish stocks, 15 bullish, 10 bearish, not my favorite group. Rather be in an airline stock like Southwest Air or maybe a JetBlue, which has a bullish power gauge rating and triggered a signal the other day. So here's JetBlue, and I'll ask you this question. Who asked that question, please, Raleigh? What's his name, first name?
But that was Anthony.
So Anthony, would you rather be in this stock, which is having a hard time gaining traction? It did make a new high in July, but didn't surpass the November peak. Or would you rather be in Southwest Air or JetBlue? To me, that's a pretty clear-cut example. I like the stocks that are in a rising trend above the long-term trend line, where the oversolds trigger rallies. So, there are 5,000 stocks to trade or invest in. You don't have to buy a Ford. You don't have to buy a Whole Foods or a Coach. I like to look for the stocks where everything is in gear. So bullish power gauge, relative strength strong. Obviously, there's a lot of buying. Look at the institutions are not dumb. They were buying JetBlue, and we know that because the Chaikin money flow spiked up here in the 910 area. That's where they accumulated their position. We're now in the markup phase. So if I'm in a group, I want it to be transportation, Love, and JetBlue are two of the winners. And that's the way I do my analysis. Now, I said we had 65 industry groups. Transportation is the second ranked group. So here are all the transportation stocks sorted by Chaikin power gauge rating. This is really a lifesaver. There's no way you could follow this any other way. Here's Hawaiian Air. Here's United. The winners clearly, and it's so easy to see if you loop through these charts, Southwest Air and JetBlue. They're the winners. And then if I go down and I try and find autos, they're way down near the bottom of the list based on the power gauge ranking. They're actually in the middle of the pack. I like trading alongside in groups that are in the top 10 to top 15. So oil integrated, oil and gas production, I'll give you a hand-picked example. It was one of my bullish stocks of the week, and this has really been phenomenal because they got this wild takeover bid from the parent company. But Kinder Morgan, I wouldn't buy it now, but that's what Kinder Morgan looked like in July when we made it our bullish stock of the week. And it had a little bit of trouble getting started, but then they bid for the stock in a roll-up. And you have KMI, which is the parent company that's buying these, which has a neutral rating. But in general, oil and gas production has been a great place to be and keeps going.
You have several times there, Mark, you have talked about a trade being the bullish or the bearish stock of the week or this, that, and the other thing. I apologize if I've missed this, but is there like a newsletter or a service that you provide where you're identifying these things? Is that something that's available to your community of clients?
There is, Raleigh. It's part of the Chaikin Analytics subscription are the 3 products: the research reports, the portfolio health check, and market insights, which I write every week, and it gets emailed to clients on Sunday. We're actually redoing our method of delivering these to clients, and they'll all be in one place in a container on our website. But just to give people an example of how easy it is to get a research report, here's Kinder Morgan Management. I click on it when I'm on the chart, and there's that 4-page PDF research report. It's just this. If you're looking for more information, it tells you what other stocks in the group have bullish power gauge ratings, so XSL, PAA, and then you can go back and say, okay, let's see what PAA looks like. I know this has been a pretty decent stock, making new highs. And then to get the portfolio health check, I'm going to go to my stocks list, because this is really powerful. So here's my stocks, again, 105 stocks. And if I want to analyze those very quickly, I click on portfolio health check, and all 105 stocks are instantaneously analyzed. 43 bullish, 18 bearish. But what we zero in on under the theory that playing defense is more important than playing good offense are the bearish stocks. So 18 bearish stocks: Amazon, Coach, Triple D in the 3D printing industry. Here are the ones that turned bullish last week. DSW is a big turnaround. Discount shoe retailer was bearish. Here are the stocks that reported positive earnings surprises. So why did the power gauge turn bullish on DSW? They surprised to the upside. Analysts started raising their opinions, and the stock went up. And then we have this power grid, which arrays all the stocks in that group based on the power gauge. So upper right, strong stocks and strong industry groups. You see a lot of the stocks we've talked about: Love, NTAP, Aeropostale. And then you want to avoid the bottom left, weak stocks and weak industry groups. So DreamWorks, Whole Foods, McDonald's. Then we recommend swaps. So if you're in Whole Foods, consider swapping into Kroger. If you're in Amazon, eBay. If you're in Triple D, 3D printing stock, consider switching into Hewlett Packard. So this stuff really works, and it's all there at your fingertips. I just want to put up McDonald's to show you a stock that's been underperforming for the better part of 2 years. So is this really a stock you want to own or trade from the long side? My answer would be no. And the reason is negative relative strength. The institutions are selling it, and the power gauge is bearish. Now, that doesn't mean the stock can't rally, and I can't for the life of me figure out why a stock like that will go from 92 to 103.5. I mean, I've been in Wall Street 48 years, so I know strange things happen. But McDonald's has problems in China, in Russia now, and the power gauge is reflecting that. So this is a way to find those stocks to avoid, and you might want to look at a stock like Jack in the Box, although I think the power gauge turned bearish briefly. Jack in the Box was bullish back here in late October at 40, on its way to 62. At the same time, McDonald's had a bearish rating in late October and was trading at about 95, and it's trading at 92.80 today. So it's gone nowhere in almost a year, whereas Jack in the Box, before the power gauge rating turned bearish, gave you a nice 50% move up, and it had been bullish long before that at 25. But just that in this time framework, from 40 to 62. If we look at a 5-year chart, you'll see when it actually turned bullish. It turned bullish back here in 12 at 20, and we started picking up on it at 25 because they had a positive earnings surprise, and it went all the way to 62. And now it's bearish. The reason is the valuations are high, and the fast food business is not really booming right now. Darden Restaurants, DRI is weak. McDonald's is weak. Darden has been a real underperformer. Olive Garden, Red Lobster. Great brands, but the stock is a dog.
Well, I tell you what, I think with that, folks, we're kind of winding things down, and want to thank Marc so much for his time. The thing that comes to mind, Marc, that I certainly appreciate about your approach to the market is that you really did demonstrate how you blend, technical analysis with the fundamentals.